So hello active traders and welcome to our Trading Week Ahead broadcast for today, October 2nd, 2020. As always, all information is for educational use only. I'm not making advice about what to buy, sell, or hold, and by watching this video, not make actual trades. Do be sure to try my live trading room at tradingopen.com. It's only $7 for a 3-week trial. Money back guarantee. You have zero risk. I'll give you your $7 back. I've had like 4 people ask me for the money back in 6 years or something like that, so it's been very popular. Anyway, great to see all of you here. Let's take a look at today's markets. Now, I said to go long here for our live room members when it was down here, and you can see proof. Here's the long alerts that I update continuously throughout the market. We had some pretty strong charts to look at those and look at the inverses. But let me ask a question. How many of you agree with me that the S&P is going to lose 3,000? I think that's going to happen by Tuesday or Wednesday, probably. The market's going to crash and burn. It's a really stupid time to be swing trading stocks. It's a smart time to be swing trading these kind of instruments, the inverses that I trade like SQQQ. Hint, I bought $11,000 worth of them pre-market today and boom, nailed it, baby, cha-ching. These are all my buys this morning. This 100% of the trades I put on today. I didn't buy anything in market because I knew that was going to do one of these fake out drops. I held steady. I didn't pussy out of my trades and get stopped out. I kept them all long and strong. And that's just around 11 grand. It's small. I know it's only 11 grand, but it's a start. I will be in at least $50,000 worth of inverses if and when the S&P loses 3,000. I am 100% confident the market's going to take out the March lows. We're due for the mother of all sell-offs coming up to a trading market near you. How many other educators in the known universe actually show P&L proof that, I don't know, they actually really freaking trade, right? Boom, I'm loving this chart because I bought it. Where did I buy it? I bought it at 24.13. I bought a pre-market. My traders got a better price because I told them the long was 23.50. When it was down here, I posted a live alert to go long at 23.50. I bought mine pre-market, and pre-market I told them I'd bought up there, so. Anyway, happy bear. SQ's leading the way higher. This is how to short the NASDAQ. Let me ask all of you a quick question. How many of you agree with me that the market's going to go down? And second follow-on question, how many of you are considering trading things that go up when the market goes down, like our inverse ETFs, SQQQ? Let me know. Okay, we're starting to get some answers. I appreciate that. Good to see. Anyway, take a look at that. That's SQQQ. Here's our SOXs. Our semiconductor inverse is starting to take out new highs. Here's the stock market. It gapped down. It did a false breakout to the upside. I told my traders we want to go short this if it got down under 333.5, and so it did a nice drop. I'll be a thrilled bear if we continue selling and we take out new lows under the 330.5. What counts is the close for swing trading, right? For day trading, we trade the open. Swing trades, you trade the open and the close, and it's really important that you're on the right side of things. Strategically, as long as the market ends the day under 335 or 33.50 in the S&P, I'm a happy bear, and especially if we stay under the close of yesterday under 337. S-Dow starting to come to life. UVXY is still kind of holding steady up here, kind of sideways grinding, and TZA kind of pulling up the rear here. But anyway, to wrap up with the inverse ETFs, NASDAQ short looks good. There are the Qs short and SQQQ. Now notice we're pulling back off right under the whole number. And that's one thing that I teach so many thousands of traders is how to trade whole number based support and resistance. Very simple. We use a 2-day chart because my favorite pivot play is always going to be a gap up that fades down to the previous day's high. And then bounces exactly off of that. That's a right or downer. If you've got a Mont Blanc pin, or even if you don't, That's a rider downer. Whenever the market, whenever anything, any stock or ETF you trade gaps up and then it's gap and crap, it gaps up, it craps out, goes down to the previous day's high, and then starts to pivot, that's always a buy, or virtually always a buy. So good pattern here. I don't know if we see any voice of the candlesticks on the 15-minute, but see if it's hammer time at the low there. I'm curious myself because I don't know. That's the 30-minute. Kind of sort of a bullish engulfing. We got a topping tail up here with the shooting star. It'd be a good time to lighten up on this trade if we lost the 2440. So any of you who are live room members, and I know there's some of you here who had gotten in from my long call this morning at 2350, congratulations. We buy the dip, sell the rip on any pullback. So if you're in long SQQQ, 2440 would be the place to trail a stop on this chart. We'll look at some momentum stocks next. Multi-time frame analysis. I don't see any sign of any strong reversal candle other than the Western technical that previous resistance became new support. That's something that my colleague Steve Nissen calls a change of polarity, where previous resistance is new support. And for more from Steve, be sure to visit www.candlecharts.com. He's brilliant. I make so many good trades based on what I learned from Steve Nissen in the last 20 years. So profound thanks. Anyway, Schwang, I got in back here in the money. Cha-ching, we'll see if it goes up. Now let's take a look at some stock charts and see what's up. Our best long pick of the day earlier was Nikola, NKLA, and this is one that one of my traders, Barry, had mentioned, NKLA. RKT was really strong yesterday, but let's take a look at our charts here. NKLA, I'd called it long at 2320. And the reason for that, by the way, was it was a pivot right off the previous little support line there and a breakout over the whole number. Notice, please, one of the keys to success in trading is making sure that you understand your chart patterns and understand that you need to look at your pre-market charts with more intensity, or it's more important to understand what the previous day and the current day's pre-market's doing than what happens right at 9:30. You have to, if the first time you start doing your chart analysis is at 9:30, you've already lost, right? You've got to do a lot of upfront analysis. I was up at 3 in the morning today. Here in Colorado, it's 5 a.m. East Coast time. So an early morning start. Normally I get up around 4, but anyway, my long, when it was down here, I said we go long. You can see proof. Here's the trigger I gave my members was to go long at 23.20, and I had them sell it all near the 25. Again, paper trading use only. But anyway, that was a good breakout to the upside. Janko Solar, also a really nice runner. One of my traders had mentioned Twilio, which is a good gap continuation. This one looks good if it breaks 294 later, or short under 286. Another quick tip, whenever you look at a chart and you're trying to figure out your entries and exits, first, step number one is figure out, is the trading range big enough? And I teach how to do that in my live room, but is the range big enough? And then secondary, where's support and resistance on the chart, and where does it make sense to trade? For example, here, I called along the pivot. Today was very much a bounce for pivot plays rather than a breakout continuation. Most of the charts I like are gap continuations, gap runners. They gap up slightly and then continue to take out new highs. That's the favorite playbook, like this one, right? And I waited a bit on the opening, so I wanted to see what I was going to do, and I said to go long over 31.30. And ran all the way up to 34.5, and it's still in the money over a point. So let me ask a quick question. If you're long this, let's say you bought somewhere on the way up, where would you trail a stop in this chart in NNOX? I've never heard of this one. One of my traders came up with it for me when it was down here, and I said we want to go long over a whole number, somewhere over a whole number, and so my specific entry call was at 31.30. Right. Yeah, the trailing stop on this would be, say, 31.70 or so, right under support. In the meantime, RKT is another big runner yesterday and a flat today. One thing you want to look at from a candlestick standpoint is the fact that usually after a big, if you have an especially big range chart, oftentimes the day after that is a relatively do-nothing chart. You get a mean reversion, right? This is a mean reversion. A big previous day often will gap down to the middle of the trading range and just kind of chop around and not be worth trading. It's still worth keeping on the radar for a breakout later, but not today. It would be something for a next week play. So the day after, 2 days after a big range day is the first day you want to trade, not the immediate day after, because oftentimes you get these choppy inside range day charts. This is an in chart. We don't like that. We like charts that are up at 2-day highs. Nova is also a big runner. Traders had called it for me and brought it to my attention up here. I said to go short. I think it was 31.8, if memory serves. That's my call for the short, and that worked out. So now I'm an unhappy bear because the market bounced up as I was talking. Anyway, the main thing is, where does this thing end the day? It's going to be haphazard and all over the place. Oftentimes, when you have a bad news Friday, which I guess depending on your perspective, but from my perspective, if the president gets COVID, that's probably a bad thing for the situation. If you have a bad news Friday, often you get a bad market day on Monday. It's often a selling day. So really, all it counts is price action. And what we want to do is see where the market ends the day. If you look at our current chart here, the previous day's low, we're kind of a triple top here, trying to take it out at 335. We would expect it to fade down, a false breakout to the upside, and we may get a drop. If we rally on up into the close or something else, it may well continue to close strong. The big signal that every professional trader is going to be looking at is, where does today close relative to the previous day's close? And is it a down close or an up close? The down close would be if the market ends the day under 337. I would be expecting it to do that. But sometimes the market doesn't do what I expect, right? We can't predict, we just react. Anyway, the point is, if the market ends the day under 337, we are slightly bearish biased. If it ends the day under 335, we're absolutely bearish biased, right? And if it ends the day over 338.5, 339 up here, above the previous day's high, that'd be a bullish reversal day. But as long as we end the day somewhere under this is the ceiling for bears, right? So if the market ends the day under this level, it's likely a good idea to go to cash on any open equity positions. Again, that's not an advice, but that's at least what I'm doing. So I'll share with you my own personal trading approach. If the market ends the day under that, I'm all cash and in the inverses right now. I will scale into the inverses into the end of the day if we end the day under the 335. So if it chops around up here and then comes back down to rest here or so, I will add more short bias inverse positions like the SQs. So good charts. A pretty good turnout now. Good to see everyone here. So it's a wild market we've got today. It's a downtrending market. You can see on the daily chart, we're still in that downtrend off the high. Really smart guy on CNBC, Carter Worth, known as the chart master, had some really good commentary yesterday about the fact that we did break the S&P uptrend, and he said that historically, if you get a pullback of at least 10% off of an all-time high, a vast majority of the time that turns into a 20% drop. So there may be some continued downside. The market's trying to bounce today, but with all the bad news out there, I'm going to stay short. Now the place to capitulate if you're a bear is if we start to get back over the 34.50. That's major R1. And of course the absolute R1, R2 would be up at the all-time high right near 358, 360. Again, I'm looking at the spiders chart, but the S&P, it's the same, just put the decimal point one to the right. Anyway, as long as we stay under 345, I'm going to stay the course with my inverse positions because that would still be a downtrending chart. If we break the trend and snap over 345 next week, I will capitulate and take stop losses and start to scale out of half of my inverse positions, and I'll scale out the rest only if we get over 360. In the meantime, it's kind of an indeterminate up and down stock market. We've got some selling bias on the open. It's trying to come back to life, and we'll see where it goes. Oh, hint, as this is doing that, our SQs are back down again. When it was down here, I called the long here at 23.5. That was great, right? Key support level on this is going to be the pre-market low, right near that 2380, 2374, 76. And a pivot long would be if it takes out new highs above the prior high. So for this instrument, if you're day trading large size and you bought here, now's a good time to sell because it's starting to drop. If you haven't already vacated the position, it's still in the money. But the place to scale in would be on any sign of a pivot, either if it bounces over, and not a trade recommendation, but I would go long. If I were day trading this chart right now, I'd be going long over 24.20 with a protective stop at 24. I'd use a tight 20-cent risk management. So I'd buy over 24.20. I would sell if it gets under 24. If it keeps going down, which it may well do, I mean, it could easily, who knows where it goes. An intraday stop loss on this would be somewhere under 23.30. That'd be for a kind of a looser, small share size intraday swing approach. You know, if you're only in 20, 40, 50 shares or whatnot, and you bought here and you want to see where it goes on the day, you'd stop out down here, right? I would expect a pivot somewhere between here and there, and the long call would be 24.20. So remember I said that and follow that into the close. 24.20, or if it drops all the way down here, again over my 23.50 trigger. But anyway, it's a magnificent chart, right? And that's the the Q's inverse, leveraged ETF. And the SQs ran from my call of 23.50 all the way up to just under the whole number at 25. Remember, that's something to remember is you always want to sell the 0.8s, 0.9s if you're in from something that's come up from below. So good charts. Everybody see that? So anyway, I bought back here. Now I'm probably near scratch, right? I bought almost 100 shares, 90 shares at 24.13. Yeah, so it's a nickel underwater right now. And I bought some more up at 24.25, which is right above where it's currently at. And these are all, I am determined to not let myself get shaken out. So I'm completely convinced that being a bear right now is a smart idea for a weekend hold. So for that reason, come hell or high water, I'm going to let these guys ride. I'm using a time-based instead of usually I use price, right? But on a strategic swing trade to short the market, I want to use a time-based stop. So if these guys take out 2-day lows on Monday, then I'll stop out. If they take out 2-day highs on Monday, which I expect we may well get if the market gaps down on Monday and sells off because of Trump having coronavirus and all the bad news out there, then I will scale in. Yeah, my goal is to be in a minimum of minimum 30,000, probably closer to 50,000 worth of these guys. I'm already in maybe 12, 13,000 worth, and I'm letting them ride into the weekend. And we'll see where they go. But these are my favorite instruments. All right, I'm going to wrap up. We're about out of time. Just a reminder, if you do want to get some intelligent alerts for things that actually run, potentially you may want to join my live room at tradingopen.com. And it's a pleasure to see you all here. You know, I urge everybody to stay safe and all that. Like Fauci says, wear a mask, wash your hands, socially distance, keep away from people. It's a very dangerous time in our world's history. I fully expect at least 2 to 3 million, unless there's a rapid deployment of a successful vaccine soon. I fully expect 2 to 3 million worldwide easily will pass away, unfortunately, by spring, and we'll easily double our count here in America. Americans have been so stupid about how they've mismanaged this whole thing. That's why our death rate's so much higher. Every other, well, not every other country, but almost all other countries, you look at the news and you see people are wearing masks almost uniformly. Here, not so much. And I won't get into the debate about whether or not you want to be smart and safe and protect yourself, but I count on the stupidity of the American people. There's one thing you can always count on, and that's dumbass people. So that's why I'm short the market, because I think the market's going to crash and burn. So we'll see. Anyway, gang, I wanted to thank y'all for being here on the Friday session. I will try and fix the emails with GoToWebinar so that they're properly shown. I'm doing the right thing on my end, but something in their system apparently isn't doing. I'm getting different responses about what time it's showing the webinar is supposed to be. You guys all got the message, so you're here on time. Let me know if any other questions or any questions at all. And if not, I think we're going to wrap up. But do play it safe. And again, my goal with this small initial 10 grand worth inverses is to kind of just throw a dart and get the party started. A serious dart, not like just a few $100 or something, but I'm in maybe 12, 13,000 worth inverses. If the market does in fact continue to sell off over the weekend, or I should say the sentiment about the market is bearish over the weekend and the market sells off with the futures late, we'll see where things run on Monday. So we may well get a gap down. This is the best of the inverses. Tech led the way up, and now tech is starting to lead the way down. If you look at our S&P or the spiders, surprising recovery, but we have all these legs down. We have one draft down, two draft down, one draft up, another draft down, another draft up. So it's obviously in an uptrend, which I don't like, but since when does the market do what I like, right? We're in uptrend continuation. The main thing, despite all these, manipulated gyrations of the market due to the forces of supply and demand, that's all well and fine. What counts is where the market closes. And then next week, where it runs from there. So an SPXL on the way up, I'd called it long at what, 5180. That was my long call for the market. And I told everyone to sell right near the previous day's low here near 5260, I think was the exit. So for those of you who are bullish, I'd called it long at 50. The SPX leverage long instrument, I called long at, when it was down here, I said we go long at 51.8. And then live in market, as it started to get close to the previous day's low, I said we're gonna wrap up the trade on this side of the bear cup at the top on the right side. We're near 52.6. That was almost a one pointer for the long side. And next long on this would be up at say 53, not a trade recommendation, but 53.30. One of my smart traders had mentioned Twilio, and I called the long today at 287. And that's a really nice chart. Now, I don't like trading $300 stocks, but for those of you who do, my long call, he had mentioned it when it was back here on the gap, and I said we want to wait for 287. That worked out. It's all up to 294 now. So lots of good charts and a lot of puzzles to solve in the market, and hopefully I can help each of you stay on the right side of it. So I think we're going to wrap. Yeah, good point. Don's saying I should go back to Saturday. And let me ask you guys a last question before we wrap for the day. What do you guys think? Because I want to sleep in on I've been sleeping in on Saturdays for the first time in a decade, and I want to keep doing that. But what do you guys think about Saturday at say noon East Coast time or something like that? Because normally I wouldn't do it that late because people normally want to go out on the weekends, but with the pandemic, that kind of changes everything. So most of us are probably at home middle of the day on Saturday. I know I am. How many of you, show of hands, are okay with Saturday at say noon? Well, I'm sorry, my time noon at 2 o'clock East Coast time or so. Is that an okay time for you guys? Let me know. Show of hands. And I may move them back to Saturday midday or early afternoon. Okay, thanks. Okay, time, good. Saturday, 2 p.m., good. Hey, Mira, how you doing? Good to see you again. Good to see familiar faces. So whether you're a bull or a bear, I like to cover both sides of the equation for traders. I'm more bearish, big picture from this current level. But intraday, we always hit. You know, you can see we covered things like Nicola and Twilio and Rocket and all RKT and the rest of them. So good plays. Hey, Trader 77 saying yes. Hey, Don saying, okay, this is good for the winter. Okay. Ronnie saying it's good. Okay, so hey, Ronnie, too, man, have a good weekend. Okay, thanks. Mira saying hi. In the email, it says October 2020, 4:20 p.m. Wow, that's strange. Okay, yeah, you two have a good weekend. Yeah, there's some technical glitch with the GoToWebinar email apparently with the time frame, so I will call them and try and fix it for you. Anyway, SQQQ, that's a giveaway pick, would be 2430 long or 2440 or 2450. Any bounce, this is kind of a pivot, an A-shape reversal, and it's trying to do a head and shoulders. It's not doing that yet, and it may recover. If it does break the left, if it breaks the left shoulder high, it may be a good breakout to the upside at 2430. That'll be my call for the day. For if the market sells off later in the session, do keep an eye on this one. All right. So anyway, thanks for being here. I appreciate it. I'll see you guys next time. Again, do be sure to join my live room if you're not yet a member. It's on sale at under 100 a month if you do the annual at tradingtheopen.com. Take care, and I'll see you next time. Bye for now. And close this up.